Well, we're in the home stretch here. We've made it to the last module. It's one of the most important ones, and maybe one of the most difficult to overcome because of human nature, but we need to think like a professional. So let's talk about that and what it takes to succeed and why most don't. So, discipline. It's hard. Waiting for the best setups, that requires patience, but we know that they work. So why is it so hard to go and pick up the money, so to speak? Well, it's about human nature. I want what I want when I want it. When it comes to the markets, and especially when you're doing this professionally for income and for a living, especially, we don't feel like we're being productive if we don't have a trade on. And in some market environments, finding a great opportunity isn't so easy to do. So when that's the case, we don't trade because there's no point in risking our money. And it says, I can show you what's needed, but only you can do what it takes to make it work. And so let's talk about it. Well, what is the Holy Grail? And here's, a definition as it is in trading terms. It's looking for the perfect system, the perfect parameters, indicators, settings that are going to make money in any market environment that's easy to follow, that is going to work every time. And you know what? It's just not out there. And so many just take years searching for it because they've been inundated with this type of thinking, which we've talked about. The indicator-based methodology, about using indicators, trend lines, moving average crossovers, Fibonacci retracements, and even the more esoteric when you get into the Elliott wave scenarios and such. It's really looking for, as I said, that perfect setup where you'll never lose any money, guaranteed to win. It just doesn't exist. So accept what we're looking for and what I've explained, and a method of using multiple time frames, bar by bar analysis, support, resistance, relative strength and weakness, market internals, and the price patterns where all of that comes together. For me, that is the Holy Grail. I know that not everyone is going to work, and that's why money management is so important, in that while I have confidence in every pattern that I'm going to risk my money on, I accept the fact that not every single one is going to work, because if I was 100% sure that they'd work, why not use, directional options and put it all down, so to speak? It's not going to ever be that way. It's great when everything works out perfectly, as it does, but we have to be focused on the risk and then, of course, the reward. So that Holy Grail is all about self-management, money management, and trade management, which I've shared with you. So again, your job is going to be to put it together in your own plan, with your own rules and setups, and to follow that. That's the discipline and patience part. Why do they fail? Well, it's always the same thing: poor planning, no education, not treating it as a business, swinging for the fences, no discipline to control emotions, and emotions are difficult to control. We're all human. And part of the process of controlling emotions is to recognize getting emotional. So in a strong bull market advance, it does become where you're willing to put on more positions, and that, of course, that does make sense. But if you're not doing it intelligently, where the money management and calculated risks and everything we've talked about, it's not going to work, because when things change, and they can change fast at times, you can incur some big losses. So I just keep bringing you back to the money management part being such an integral part of success here. A lack of objectivity. Your ego is too big. Well, a lot of individuals that come to the market have been successful in another business, and maybe they got a bit of an attitude, but the market will humble you, because there's no guarantees. And money management, lack of persistence, laziness, They don't do the work. What does that mean? Well, don't scan. They just see a setup. They decide, oh, I'm going to press the button on that. They don't keep their journal, tracking winners and losers. And, if you don't do the work, it's like anything else. You're not going to succeed. Your expectations exceed experience. Well, if you're taking this course, you may have a lot of experience, because I've had a lot of individuals come and get education that have been in the markets for a long time, but they've never approached it in a professional way, meaning getting an education, but they've been in the markets for a long time. And maybe they think that they're going to make a lot of money, but their experience and lack of education doesn't support that. Why does it happen? Human nature. Back to the same thing. Why do traders succeed? Well, they're prepared. Before they press that button, they have realistic expectations, clearly defined set of rules, rarely if ever break the rules. Well, let's be realistic here. Human nature being what it is, we're going to break rules sometimes. There are going to be patterns that set up that they look good. Maybe they're not perfect, but maybe the market environment being such that a lot of things have been working out, so we loosen up the rules a bit. That's going to happen. Probably plenty of times you're going to get away with it. If you know what you're doing and you're taking calculated risks, everything will be fine. When there's an opportunity, you take it, rather than continually second-guessing what's happening. Going back to the what-if situation. Well, if you had a plan and you understand the patterns, you're not going to be saying what if, because you understand what's happening as explained. Multiple time frames, patterns, trends, so on and so forth. Once you're in the trade, you let the plan take you to profits, meaning money management, bar by bar, trail stops, pivots, and such. If you can't find an opportunity, you don't do anything, what we call SOH. You're sitting on your hands. You're doing nothing, because there's no reason to be placing trades for entertainment. We're not here to be entertained. We're here to make money. And if we find the good setups that are in alignment with what you've learned, the money will follow. They don't change their rules on the fly, meaning they're not deciding that, okay, based on such and such, I can now do something else. It's not the way it works, and we need that rigidity as to what we're going to do, because otherwise you're flying by the seat of your pants versus a trading plan, and in the long term that just doesn't work. And they're unwavering in their confidence and attitude. And part of the way you get there, honestly, is from losses and not following the rules. It's like putting your hand in the fire. And when it comes to the markets, for whatever reason, at the beginning, there's a high tendency to put your hand back in the fire because of the greed factor and the focus on the money versus the approach. So knowing that, I can't tell you that you're going to not put your hand back in the fire, but just being aware of it certainly helps to avoid that. Consistency. Well, profitability is not always about finding the perfect pattern. It's certainly the start. It's what we've been talking about in this whole course, but it's about consistency. As it says in regard to the trade and money management, once you've actually found the pattern. So through that consistency in your approach, execution, as it says, the money becomes a byproduct of you executing your plan with consistency. Why have a trading plan? I think you've gotten the point by now, but a big part of it is controlling your emotions, being objective versus relying on subjectivity and tips and just arbitrary beliefs as to why prices should go up or down. You're developing a robotic indifference to what's happening. Great to say that. The reality of it is none of us are ever going to be robotic, but starting with the theoretical is a starting point, and having a trading plan is definitely going to help us get to that point, and being prepared for all market conditions. You have the tools to do it with everything that I've explained. And the market internals that I've told you I have used for decades will certainly tell you when risk is rising for longs, and if it's a bear market where risk is rising for shorts, and when opportunity is rising as well. To build consistency and faith in your plan can only come through experience. So once you've gotten an education, experience follows, and your confidence in your consistency to follow through builds. It's simple, but not easy to do. But you've got the information to do it. You're going to develop and document your approach to the market. So you'll measure your performance to see how you're doing. You'll make refinements. This is about keeping your journal, and it keeps you focused. What's the task at hand? Following the plan, and of course, in turn, making money. And as I said, the money is the byproduct of following the plan. So your plan should always have an answer, meaning if this happens, what am I going to do? So once you've gotten to the point of here's the pattern, and I've looked at the broader markets, and I'm ready to execute the trade, well, you've got your stop loss. So there's part of the answer. If it doesn't work, I know what I'm going to do. My money management has provided an answer as to how much money I'm going to lose. Now, again, as a swing trader, we're taking that overnight risk, so gaps can occur. It'll happen, but being aware of earnings, economic reports, and maybe Fed announcements, all of those things help us to avoid risk that is avoidable. So if there isn't an answer, you sit on your hands, you do nothing. Keys to success. I know I'm repeating here, but we've repeated a lot through this course about, the repetition of continually reinforcing what works. And that, in this case, the trading plan. If you don't have one, well, almost certainty guarantee failure. I think it's probably close to 100%. You might get lucky now and then, but from a long-term point of view, without a plan, I think it's a guarantee that you're going to fail. And that trading plan is your success key. So obviously, make one. And then making that plan, a lot of traders, they just don't spend much time on follow-up. Again, this is a job, meaning, look, if you want to make money consistently, you're tracking your trades, you're doing your scans, you're finding the high-quality setups, as we've discussed. You're placing the trades, you've got your stop losses in, and you're following the rules. So there are a lot of things to be reviewed and learned, but you have the information to build on. Patience and discipline to follow your plan and method is the success key. And I know from experience, I've been doing this for a long time, that it's the last area that most conquer, even after hearing about it. Why is that the case? It's human nature, and we all follow the same path. Those that are educated get to their goals a lot faster. It's the same as any other business. This one is definitely tougher because of the human nature factor, but you can do it. You've got the information here to do it, so you just do it. Just do it. Losing streaks. Let's talk about that a little bit. Well, most of the time, once you've got your trading plan and consistency in what you're doing, losing streaks happen because of a changing market environment where patterns begin to fail. Even while you've got the tools, as explained in your market internals, things don't necessarily turn on a dime, and you're going to see good setups that will fail at that turning point. And the money management part is going to take care of that. But after several bad trades in a row, maybe you're missing something, right? So stop trading. Reevaluate, review your trades in your journal. Look at those winners and losers. You're going to see some recognizable patterns, and you'll say, "Oh, I was chasing, or things were near resistance." You're going to find what it is that you were doing wrong, or maybe it's just a bad market where it's changed. So it just comes with being in the market. But anyway, you're going to eliminate poor quality trades, get in a positive state of mind, review your list of demons, whatever it is that you've been consistently doing wrong for whatever reason, right? Review it and stop. Paper trade, as if it was real money, meaning don't just take trades or say you're taking trades because it's not real money. Approach it from a real money point of view. Develop consistency with smaller share size. I even mentioned $10 when we went through the money management part. Whatever is relative to you, whatever you're going to keep that maximum exposure to, make it virtually indifferent and focus on executing the plan until you have those 3-to-1 winners again. Be selective, as you always should be, about the trades based on what you've learned. Review the material in this class. The answers are here. And again, through repetition, it becomes ingrained to you as to what you're looking at. The great setups, I've explained them to you. You'll see them as they begin to form. And you'll place the trade with money management rules, and you'll manage them accordingly. And things will work out in the long run if you follow what you've learned. So at this point, you've got great information to build on as a master trader. It's up to you to do all the work. Internalize this material. As I said, make it yours. And that's what it has to be, to where you've incorporated this into your plan, into your style of trade, into the type of stocks that you want to trade. I've mentioned I don't trade biotech stocks because I'm not willing to assume the risk. The upside is very attractive, but I won't assume the risk. Maybe you will. I mean, I kind of think about all the traders that I've maybe not necessarily met today, because a lot of things happen over the internet. But in our trading room, I can think of one trader that is always mentioning biotech stocks. And of course, he's had good experiences there and made good money, or he wouldn't be doing it, and maybe hasn't been bit by the bad news situation. I can't tell you, I've experienced the bad news situation personally in a biotech stock. I've experienced it in other stocks, 2 of them that come to mind. I don't remember the symbols, but they happened because I didn't check earnings and got caught and gapped down. So that pain definitely reinforces following the rules. Now, as far as biotech stocks, I've seen many of them gap down 50%. So I just don't want any part of it, even though the upside is there. We define opportunities because there really are no secrets. It's about putting the odds in your favor and having the discipline to follow your trading and money management rules. None of us know the future. Once that new bar starts to form, we have to be open to what happens. Tools I've provided you are going to tell you what is happening, won't necessarily going to tell you what's going to happen tomorrow or next week. But with an objective approach to the markets and money management, you should have confidence in what you're doing. You've got an objective approach, and then see what's going to happen. So going forward, it's about Master Trader and you building your financial future. All the best. If you have questions, of course, email me, and I will see you in coaching, where we will review and you will ask questions, and we will work toward ingraining this information and making it yours. And the end goal, of course, is making money. All the best, good luck, and we'll talk soon.